Good morning, Cam Brar for Cam's Mortgage Minute on Monday, May 28th. Today I ran across some interesting numbers as it relates to our 5 key major Canadian cities and their real estate market. So let's take a quick look. Vancouver, let's start with that. And it seems like Vancouver is very much a unique market because the disconnect between house prices and underlying fundamentals has been there for years. But that trend may be changing, as the average resale prices have fallen 10% on a year-over-year basis in April. Now, the key trend to watch for and to see where this is all going to play out is what happens with the inventory and the sales levels, which the inventory is at record high and the sales levels are at record lows. So, which way that trend is going to go? Well, we'll talk about it, I'm sure, over the next coming months. Now, Calgary went a major correction starting in 2007, which carried on through with our, debt crisis and the subprime crisis and everything else. But it looks like it's come back a bit. Now, it's pretty much recouped back to the previous highs, but the fundamentals do remain somewhat stretched. Now, the one thing with Calgary that's unique is that Calgary is a city that's built on future value. It's sort of like a stock that's trading on what earnings will be. And a lot of people are still betting that the province's fortunes will be quite on the rosy side, and that is obviously affecting Calgary's market value. In terms of supply and demand, the city looks pretty strong, with sales rebounding off their lows but still well below the high of the boom years. And as you know, Alberta can boom and bust. Now, in the short term, it looks like April resale prices rose basically under 1%, which isn't a whole lot for what they are, but we'll see what inventory levels and what impact they have on Calgary over the next few months. Ottawa, on the other hand, sales remain quite robust, but an interesting trend is beginning to emerge in Ottawa, and that is an unusually high amount of listings for this time of year. Should this trend continue to persist, it will definitely put some pressure on resale values because it's just going to be a lot of inventory out there. Now, Toronto, which is on the opposite end, is basically experiencing record low inventory levels, which has pushed the single detached residential housing market to over 10% on a year-over-year gain in April again. The once hot condo market has cooled somewhat, but still, a year-over-year basis has risen in April to 2.8%. Now, what will happen with Toronto? Well, we might see a continued cool-off trend, but that's not going to happen much until the supply and demand return to more historic levels. So the lack of inventory in the city is really quite incredible right now, and that, coupled with the resale market, is still in the short term pushing prices upward. Montreal, Canada's second largest city, is a city that often people don't talk about, but again, we take a quick look at it today. And in discussions about regional bubbles, there are some fundamentals that seem to concern economists with the city. On the supply and demand front, there is currently substantially far more inventory in the market than ever before. Now, the saving grace for this market has been that the resale market has pushed the average prices up 3.5%, again on a year-to-year basis. But remember, now this market is relying very much on a strong demand for inventory. So if that demand should fall off, we could certainly see some corrections headed that way. So, 5 different cities, 5 different tales, 5 different trends. It will be interesting going forward in the coming months to see where they all land, and I'm sure from time to time we will be talking about this, because what happens in the housing market affects the mortgage market and vice versa, and all the way around. Anyway, it's been Cam for Cam's Mortgage Minute. Enjoy the rest of your day.